Hi everyone, Brian from Bear Bull Traders. It is Sunday, July 18th. Hope everyone's had a good weekend. And of course, this is the weekend Sunday night video where we go through what happened over the last week and take a look ahead, see what we got coming down the pipe. Of course, we're just starting out with earnings season, so we've got some stuff on deck here. But as I mentioned on the Wednesday evening video, I thought things were looking a little dicey in terms of market action and where the markets might be going. And I started to lighten up on a lot of my positions, and it looks like that was fairly timely because we did have some selling going on into the latter half of the week there. So let's take a look and try to see where we're going from here. Okay, and of course, before we get going, I always like to throw in a quick plug for my book on Amazon, How to Swing Trade. Beginner's Guide to Trading Tools, Money Management Rules and Routines, Strategies for a Swing Trader. So if you haven't checked it out, there it is. So let's get on with analyzing where things are right now and where we might be going at the end of the week here. Okay, so this is the first part of the week here, week of July 19th, kicking things off on Monday. What have we got going on this week? We've got housing starts on Tuesday. That should be interesting to see where the housing market is. And keep an eye on housing stocks there. And then, of course, as I mentioned earlier, we're getting into thick of earnings season. It's just starting to ramp up here. Had the financials last week. And, of course, Monday after the market closed, we're getting IBM. It's kind of light on Monday, but then Tuesday, some interesting ones, Netflix, UAL, United Airlines, of course, and CMG, which is Chipotle. And then Wednesday, we get some more interesting earnings, Coke, Verizon, Texas Instruments, J&J, Las Vegas Sands, so a real smattering across some of the industries there. Communications, technology, gambling, and healthcare, and some mix for your drinks. So anyway, and of course, I am always watching the yield on the 10-year Treasury. It did drop last week, and it seems to be dropping again right now as we speak in the futures markets. This is not going to be great for financials in the IWM, of course, as that gets weaker. So does the IWM, which is heavily weighted in regional financials. And of course, the US dollar looking like it's about to break out. So that's not going to be great for commodities and emerging markets. And what stocks are kind of hot on Wall Street bets right now? GME and AMC, popular. But yeah, a lot of focus on earnings right now, and a lot of stocks really struggling here. So let's get into that, a little bit more of a deep dive. Again, start out with the big picture. This is what had me concerned on Wednesday, as I pointed out earlier. You can see here the amount of stocks that are trading below the 50 moving average. This kind of gives you an idea of where the internals are. You know, we were bumping up against new highs on some of the indexes, and yet we've got, at this point, we've almost got 2/3 of the stocks trading below their 50 moving average. So not what I would call a healthy market as we continue to push higher. And you can see we've even got about a third or more of a third trading below now trading below their 200-day moving average. So pretty much split between new highs and new lows here. But again, this was one of the flags that I threw up on Wednesday as being a bit of a concern for the markets going forward, at least in the short term. Take a quick look at the indexes here, and you can see this is the TLT. Price of the 20-year bond, you can see it's just continues to go higher. This is definitely still in an uptrend. And the bonds are just going up, the demand's going up, and the Fed is in there just buying bonds like crazy. Let's flip over to this chart I wanted to show people quickly. This is the total assets. This represents the amount of buying that the Federal Reserve is doing, and just look at how it's just continues to go higher. They just continue to buy, increase their holdings in treasuries, and just the amount it went up over the last week was just amazing. It's to me this is really I really don't like the look of it. I mean, I don't know how it's going to resolve itself, but it's just a kind of a scary chart in my mind. But I guess they know what they're doing. So anyway, you can see here this is the yields obviously on the Treasury. You can see they're continuing to drop, and again dropping in the futures markets right now. Again, this is not going to be great for the banks, the financials, because as that interest rate drops, so does their net interest margins, and they don't make as much money. And here again was another flag I raised on Wednesday, just looking like the transports, which usually lead the Dow higher, continuing to break down here. Definitely not leading the Dow higher. Just a really negative chart here. We've really lost this on the weekly. We've lost this 20 moving average here. And momentum continues to drop here. You can see RSI just about to drop below 50. And yeah, there's nothing that particularly looks good about the transports chart. The Dow, again, continued higher as the transports rolled over. And again, transports often lead the Dow. So I'm expecting some more downside. Maybe there's some support here around this 34,400 level, where we got a couple of moving averages. I would expect to see some support there. But again, momentum, sort of losing momentum here. You can see the MACD rolling over. On a weekly chart, we actually were down on the week, which hasn't happened for a few weeks. We are down about 0.5%. On the Qs, again, Qs sold off pretty hard on after we had that reversal day Wednesday, Thursday, Friday, sell-off days. Again, we went out near a low of the day on Friday, which of course isn't exactly a good way to end the week. And you can see here a little bit declining volume, but all these momentum indicators rolling over as well. So could be some support right here, 355 on the Qs. If we lose that, boy, there's a whole lot of air here between 355 down to, say, this level, 342-ish. Again, on the week, we lost 1% on the Qs. And again, the SPY putting in some topping action here and then basically rolling over. You can see the RSI making a series of lower highs. Pretty big volume on the SPY on Friday. And on the Qs, again, we lost almost 1% here, or not the SPY, the Qs, the SPY, we lost almost 1% on the week. Again, so it didn't finish out the week very well. And the IWM, which of course is the ugliest of the ducklings, ugliest of the charts. You can see here we're right back down into some areas where we've had some prior support on the IWM. But I think we could head lower if interest rates continue to drop. And you can see here we've really lost momentum. RSI really getting dropping here. And on the week, of course, we lost over 5%. So yeah, not a great looking chart for the IWM. And again, if the interest rates continue lower, I think we maybe this 200 level or under 200 at this moving average might be a place where we might bounce. Again, going to depend on what the yields do. Mentioned earlier, it looked like the dollar was about to break out here. You can kind of see we're making some topping action, but each pullback, a little bit of a series of higher lows, higher low, higher low. So maybe we break out here this week on the dollar. And volatility is picking up a bit. We did see a bit of a rise on Friday, especially. You can see here it started to pick up. So I'm expecting some more volatility. And Bitcoin again is just seems to be making a. I mean, it seems to be just making a series of lower highs. So you can see here high, lower high, lower high, lower high. And we'll see if it can kind of catch a bid here. This is a pretty important level of support. If we lose this 31,000 sort of 500-ish level, then yeah, 30,000 could be easily the next stop. So let's take a quick look at some of the actives or stuff I've taken off since Friday. So I took my DVC off. As I said, I was going to lighten up on a lot of positions, so I'm out of this one right now. I'm still in my Ford, although I've lightened up because it does look like it's kind of breaking down. I would expect it to find some support around here, but this is again is more of a longer dated hold. It's a long dated options till next year. I got out of GDX. I just didn't like the way it couldn't break out here, and then it started to roll over on Friday. So I'm got out of that. I got out of this trade too on Friday at the open and made a bit of money on it, but I'm glad I got out when I did. ICLN, I've got out of that too. Don't like the way it's trading. Willow, really disappointing, but I am still in that position. So one trade I did do last week, and I did this strategy in the last earnings season. I just basically sold calls. So they were naked. It's a little bit of a risky bet, but after JPM reported earnings, this happened last earnings season. They popped up and then immediately sold off, and that's exactly what happened with JPM this week. So I waited for the pop after the report. I sold the 157.50 calls, and basically covered half of them when they were about half what I sold them for. Bought them back, and then I just let the rest expire worthless. So I collected the premium on that. So I will be looking at doing some similar calls strategy on Netflix this week. And some of the other ones that report, although Netflix did pull back a lot here already over the last 2 days. So I'll be looking for some opportunities to sell options on, especially call options on stocks that report and then pop up after their earnings and then start to sell off. So gives me a nice level to trade against. But again, a little bit risky, because if they really start to rip higher, you're going to be stuck in them. So that's one strategy I'm going to be using this week if something looks attractive. So a quick look at the candles at a glance with the different sectors here. You can see the consumer discretionary really got hit on Friday, and it's been rolling over for pretty much the entire week. Same with communications. Technology again topped out on around Wednesday. Thursday, Friday, down days. Industrials taking a hit. Materials, just about everything across the board taking a hit here. Even the staples sold off a little on Friday. The ones that are doing well though, staples still up on the day. Utilities, of course, safety trade. That's where money was going, as well as real estate, and healthcare kind of held in there too. But I'm expecting more weakness in this top group of 6 here, and energy as well, continuing to head lower, especially if this other concern about the Delta variant and the COVID starts to, shut different countries down again. I think that's one of the other things that's kind of weighing on some of the markets at this point in time. So I'm not looking at too much in terms of stocks. It's definitely nothing's really catching my eye on the long side. One stock that could be interesting, one stock trade that could be interesting is TZA. Again, if the IWM really starts to break down here, TZA, which is the inverse ETF, 3-time bear, it's going to probably pop up higher here, so could be interesting. Also, could be interesting is Dust, which is the gold miner. Again, inverse, it's a short ETF. So again, just maybe shorting gold here if we can break out of this this trading range on Dust. Then that's sort of a negative play on gold prices and the gold miners. And even if the gold prices do go up, if the stock market does get hit pretty hard here, everything is going to get sold. So, they'll ignore the fact that gold prices are up. They'll sell everything, including the gold miners. So that's a kind of an anomaly that sometimes happens when the markets drop. Everything goes with it. So keep an eye on that one as well. And the only other one that kind of caught my eye here was SoFi. It does look like it's trading down into a pretty solid area where it had support before, here, and here. So maybe 15 holds here, but again, I'm not. It's really oversold on the stochastics. So something to keep an eye on. Could take an entry here and then keep a tight stop, because if it loses there, I don't know where it could go. Probably, let's see quickly. Let's take a look at further out here. Yeah, it could go a lot way lower once we lose that for sort of 15 level. So anyway, let's just take a quick look at the markets. And let's see where we're sitting right now. As you can see here, we're looking like we're going to open up pretty much to the downside. We've got the Dow down about 176, S&P down about 16, Nasdaq's down about 30, and the Russell again showing a little bit of downside as well here. As far as commodities go, oil losing some more momentum here. Gold up a fraction. Probably again the miners will, even though the gold is up, miners will probably open lower. Kind of interesting that nat gas is up. And on the treasuries, you can see here again we've lost this 1.3 level right now on the 10-year treasury. I think at some point, dropping interest rates were good for the Qs, but at some point I don't think they're going to have the same sort of effect or catalyst of pushing them higher. I think we may be in a bit of a correction here. So keep the powder dry, keep the eye on the markets, and short as you see fit. I think that's where we are in the first part of the week here. So that's it, everybody. I hope you had a good weekend again. As usual, we'll start the Monday off with Jared at Engineering the Markets at 8 o'clock in the morning, live on YouTube. And then we'll be doing the pre-market show with Norm and Carlos again, looking for stocks on the move in the morning. And of course, trading the market open at 9:30. Again, probably live on YouTube. So hopefully to see you at all or one of those events. And take care. Have the good rest of the weekend. What's left of it. Bye for now.